Welcome back. You're watching Stock Watch with me, Zanati Kuma, and joining me to take your stock-related questions tonight. Deryck, Janse van Rensburg from Anchor and Rowan Williams from Nitrogen Fund Managers. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS to 41392 or on X using the hashtag Stockwatch. Thank you so much for your time, gents. This rally that we are seeing on the JSE, really a welcomed one. But starting off with you, Deryck, do you think that it was a long time coming?
Yeah, so I think, a day like this makes it very comfortable to sit in a position where you are actually a stockbroker invested in the JSE. So, for so long now, we've seen this JSE consolidate. You look at the SA Banking Index, and within that, take a FirstRand, for example, for many, many years traded between kind of 55 Rand up to about 72 Rand. And for the first time, we're starting to see new highs happening, particularly in the banking space, which is obviously very SA Inc. related. But yes, a long-awaited welcome. Some decent flow taking it to the highs that we're seeing at the moment. And yes, it's done a lot in the short term. Perhaps it does consolidate. But I certainly think that from a South African perspective, we're kind of showing the green light to offshore investors to kind of have a look at us. And there could be some further flow behind what we're seeing at the moment, which could see this rally continue. Again, a lot's happened in the last 3 days, so maybe a bit of consolidation and a bit of short-term profit taking. But I certainly think that, we should possibly see a further re-rating, which should take these stocks higher from where we are at the moment. But again, short-term done quite a bit.
Yeah, of course, as expected, lots of questions on the financials. After today's good stock rally on financials and banks, would your panel still recommend a buy on the 5 banks and financials? Can we expect things to go higher after today? And are banks and financials still cheap? Yeah, so before I get to go to the second part of the question, which banks would you prefer? Yeah, Rowan, those financials up by a lot. Do you think that they are still cheap at this point? Would you still be plowing in, considering the gains that we've seen?
So certainly there's a lot of momentum behind these stocks, which is often a good indicator that it's time to follow the momentum. So as Deryck was saying, yeah, a lot of money and liquidity flowing in, driving the prices high. We've seen quite a lot of analysis coming from the local brokers linking banking shares and their valuations to bond yields, and they're very sensitive to moves in bond yields. And we haven't seen a huge move yet. Some movement in the narrowing of the bond yields, but it does look like they could move down further. The Rand could strengthen a little bit further, and that would imply, that the banks have actually further to go in terms of this re-rating. So I think if you're in them, you can certainly hold. There may be a little bit of consolidation in the short term, just given sort of significant moves up to 20% over the last 2-3 days. But on a valuation basis, they still look reasonable. They're still screening reasonable, both on a PE and a dividend yield price to book. So obviously, growth has to follow through at some point, this sort of risk rally. But assuming that does take place, the banks still, I think, are good value here.
Yeah, and really this high tide lifting all boats, including Capitec, that a lot of people don't see as cheap. Which banks would you be recommending for a buy, or is it just a buy? Everything's screaming a buy right now in that banking sector, Deryck?
So, yeah, I think they're all going to be very closely correlated. And we saw it in a move like today where, you had moves to the tune of 6, 7 to 8 odd % across the board within that banking space. In terms of the sort of best quality or the ones that stand out from my side, I think FirstRand has always been kind of my top banking pick, just from a quality perspective in terms of an underpin to earnings and future earnings. But there's also some value in things like an ABSA and an Nedbank. So, yes, Capitec looking quite expensive, but probably will remain expensive. And I think, as Rowan alluded to, I think, they still look cheap. I think, yes, we have had a 20% rally in a very short space of time. But even on the back of that, we're still sitting on single-digit PE valuations. There's decent dividend flow behind it and dividend sort of underpin. And coupled with that, remember structurally, we've actually had quite a long period of no load shedding, which is certainly good for economic growth. You know, and we're just sending the right signs to the sort of global arena from a South African perspective that, you know, things are getting back on track from a South African perspective. So if that's the case, not a lot needs to happen from an earnings perspective to simply get a re-rating in these banks to higher valuations, which should see higher prices from where we are. But again, a lot's happened in the short term, probably a little bit of consolidation. My view would be that, you know, the banking index and SA Inc. in particular is probably a buy on weakness as we start to navigate through the next sort of 6 months towards the end of the year.
All right. So Deryck choosing First Rand as his top banking pick there, but still saying that there is value in Nedbank and Absa. What about Standard Bank, Rowan? There's a question here. I'm too nervous to get excited about this rally. I'm 20% up on a Standard Bank. When should I take profit? It has a 17% weighting on my portfolio.
Yeah, so Standard Bank has done particularly well with all the other banks. It was actually my stock pick a few weeks ago, so it had sort of a bit of a lull. Their most recent results update was somewhat disappointing, slowing in their earnings trajectory, but I think it's more around the valuation as we're discussing now and the sort of rating, which I think is still reasonable, and Standard Bank does screen cheap. It is quality. It has got quite a lot of exposure to Africa, so you have to be positive on the growth prospects for Africa. They do look good. I think short term, some headwinds from an earnings growth perspective, but in the medium term, still very well placed, very strong competitive positioning. So if you're a long-term investor, medium-term investor, I would certainly say hold. If you're more of a trader and you were looking for a short gain, I think you've probably captured a lot of that in the short term. And if you want to recycle and diversify, there are some other stocks that are cheap, maybe that haven't picked up sort of the full beta that we've seen. So you could recycle into, say, mid-cap stocks and say, keep your exposure up, but maybe in other stocks that haven't run as hard.
Well, another stock that's been under pressure for a while that also caught on to the market optimism today is Sasol. The question goes, I don't understand Sasol. So many panelists said, don't touch it. Yet today it was up nearly 11% with huge volumes being traded. Deryck, do you think that this is just part of the bargain hunting?
Yeah, so I think one needs to be mindful of the fact that the valuation on Sasol is cheap, like the rest of South African, you know, the rest of the SA market. So I think it was a general sort of very short-term re-rating towards South African business in general.
Yeah.
And the fact that it was sitting so cheap, it still looks cheap even at these levels. You know, it just kind of re-rated along with the rest of the basket of SA-based businesses to the upside. We have had a little bit of an uptick in the oil price, which obviously, you know, gives it a bit more positive sentiment. But I guess the sort of answer is there's a lot of bad news in the Sasol share price as we sit at the moment, and rightly so, given the cheap valuation. So just a general sort of uptrend in the mood towards the SA market helped lift that Sasol share price. But yeah, it probably sits and trades around current levels for some time before you start to see a strategic turnaround. You'd need to analyze, you know, interims and final results to really start getting bullish on it again. But it probably trades in a range around these levels for some time until we see that.
Yeah, and actually, Rowan, do you think that people today just decided to look past Sasol's operational headwinds and focus on the general market positivity and the power of the oil price?
Yeah, certainly. So what we're seeing is sort of a risk-based rally. So it's really discount rates, risk-free rates, sort of equity risk premiums, those that the discount rate in the valuation equation that has come down and leading to significantly higher prices. So and that would be the case in Sasol. I don't think operationally too much has changed in the short term. The rand's actually strengthened a bit, which is a little bit of a headwind. So really a risk-based rally. that has to be followed through, I guess, with some sort of economic growth and deliverables to sort of catch hold. But for now, there's not as much a discount to South African stocks as there were 3 days ago.
Well, pretty interesting, because obviously you have these gains on SA Inc., but actually the Rand hedge stocks today were under pressure. There is a question on Richemont. What's going on? Like the brands in the portfolio, it's come off in the last 2 weeks. I'm wanting to enter, but will it dip? Deryck?
Yeah, so, Richemont has been one of the star performers if we just look back over the last 18 months. And it's really that sort of luxury goods space that's caught a little bit of a bid. And I'm talking more sort of looking back over the medium term, where the prospect of lower interest rates is becoming a lot more likely from where we are. Let's call it sort of plateauing at the top of an interest rate cycle. Any turn in interest rates will certainly be positively received by the consumer, which should stem into further spend for a lot of these luxury goods type stocks where Richemont falls into.
Yeah.
It's run hard. It's consolidating or probably some short-term profit taking coming down from the high sort of valuations and levels that it's been sitting at above 3,000. And again, looking at the movement in the Rand, we've had a very strong move in the Rand, over 3% in a very short space of time. So I guess a little bit of profit taking in a lot of the Rand hedges, and in particular Richemont, was probably due, but still a good quality business, good quality earnings behind it. If we do get that sort of turnaround in the cycle from an interest rate perspective, I think it's going to be positively received by a lot of the luxury goods stocks where Richemont falls into. So I'm not too worried about it. Good quality business. If you've got it, you kind of want to ride through this short-term sort of negativity that we're seeing and hold it through the cycle.
Yeah, I feel like Richemont is also one of those that are never cheap, always expensive. This pressure that we've seen in the last maybe week and a half, 2 weeks, Rowan, do you think that could be a buying opportunity?
Yeah, so part of it is just Rand strength, as Deryck has pointed out. What we also saw is there have been some ructions in Europe around the French snap elections, and then maybe, interestingly enough, an increase in political instability in Europe. So it's sort of been quite a bit of changes. So I think that's also weighed on sentiment on European listed stocks, which Richemont falls under. And so it is a little bit of a trough. I think if you're bullish about demand for luxury goods in the medium term, like the brands, there's no reason to not keep holding the stock. It is a short-term sort of dip. It may continue in the short term. The Rand may strengthen, but in the medium term, it should all even out.
All right. Let's take a look at more questions. There is a question here on Pepkor and Shoprite. The viewer is asking how come they're up so much. I guess you could credit that to the SA Inc. story. But your views on Pepkor and Shoprite, Rowan?
Yeah, both quality businesses. Shoprite, bellwether grocer, it has been the strongest performer, winning market share, consistently executing. And what you're seeing is with these stocks where they screen, foreigners do like them, and they appear on their radar screen, and so they are seeing, I think, a beneficiary of a lot of that flow into SA Inc., as you mentioned, notwithstanding what looks like quite a full rating. Pepkor is more reasonably valued. It sort of had a bit of a lull in the share price. I think people were a little bit disappointed with the growth. I mean, we are seeing the very short term, the SA consumer under pressure. But again, the SA retail stocks have really kicked hard. Foschini's results were good. And I think that's also improved sentiment towards the stock. So we've seen a significant uplift, and they still look reasonably priced. But I think it'll take a little while for the consumer environment to improve. But maybe we're starting along that journey where there is room for the SARB to cut rates later in the year, and that will get the consumer going. Sentiment is improving. So still both reasonable places to put some money.
Yeah. Pepkor's, I guess, positioning and journey has been quite interesting. Rowan talks about, some of the disappointments that we've seen on Pepkor, but I think in their last numbers, they did talk about good momentum in their fintech business. And obviously there's the growth into Brazil. Just starting off with Pepkor, Deryck, your thoughts there.
I'm actually quite bullish on Pepkor. I think, as Rowan alluded to, obviously kind of not as quality business as some of the sort of big monster flows like a Mr. Price or a ShopRite for that matter, two different types of retailers. But I think Pepkor is reasonably valued if you just look at the valuation on it. And I think they've obviously navigated through a very tough economic period, as Rowan alluded to, with regards to the consumer being under pressure. But it certainly does sort of play in a high volume LSM market where they do deliver good quality goods to the LSM market that they play in. And I think that they are looking to diversify those earnings, particularly into that fintech business and beyond South Africa. I do think that it's obviously caught a bit of a bid on the back of this SA Inc. rally, but I'm a happy shareholder of Pepkor, and I think that it's a very well-run, good quality business that could, over time, start to deliver some decent returns. But it's a patient sort of investment. You don't want to get too cute on it and get too clever on it. The valuation looks attractive. If we do see a continued uptick towards SA equity, then I think this also needs to re-rate somewhat, and I wouldn't be a seller of it. If anything, again, probably adopt an approach where you buy on weakness and accumulate and be patient with it.
All right. Just on that also, assuming the markets like the GNU cabinet appointments, how low can the rand go in the short to medium term? I don't think anybody really has a crystal ball for that. But the more interesting part of that question, do any local resource stocks stand to gain despite a strengthening rand? Rowan?
Yeah, so what you are seeing is quite a big difference between those that are dual listed, like say an Anglo or BHP, which are priced in London. So when you translate that in pounds back to rands, the shares were under some pressure today. Sort of contrast with that with, say, something like African Rainbow, which is only listed in South Africa. The share price was up. So I think some of it just relates to those share price mechanisms, and if a company is seen as sort of a South African entity or is a global diversified miner. So African Rainbow Minerals in particular does look quite good. I think the rand obviously puts pressure on their earnings because it's less, they sell in dollars. But I think executing well, the valuation's quite reasonable. Some of the parts looks quite cheap still and will catch, I guess, the SA sentiment, which we're talking about. So that's probably one of the better ones if you're looking in the resource space.
Deryck, would you be going for any of the resource counters in an environment of a strengthening rand?
So I think let's park the sort of resource share prices as well as the rand one side, and let's be mindful of the fact that the sort of big fundamental driver of this is going to be commodity prices. So commodity prices have been quite soft if we just look back over the last 12 to 18 months. And I guess it's somewhat of a function of global growth in general, where a higher interest rate environment certainly pulls the handbrake up on global growth. Couple that with a bit of a tough environment when it comes to China, which is a big consumer of our underlying commodities and commodities in general. The sentiment hasn't been very positive towards resources. I think if you just look at the macroeconomic situation and we do move into a period where interest rates could gradually start to come down, that would be quite bullish for these commodity prices. And then you would probably see some higher resource prices. We know that Bulletin were looking at Anglos as a potential acquisition, and that saw the share price touch as high as 640 Rand recently. It has retraced back down to 550. Anglos has kind of spoken to the market and said that they are going to repackage their business, unbundle Amplats, hold on to Kumba. Their copper asset is a very valuable asset. So I think with the pullback that we're seeing in something like Anglo, it could come down a little bit more. I'd probably use it as an opportunity to start accumulating. You will get this unbundling of Amplats at some point, but I do think that Anglo's, as a diversified commodity global player, is basically putting a big for sale sign up for it. So you might find that within the next 6 months, someone like a Glencore comes and approaches them, or perhaps BHP after the next sort of 6 months starts to relook at Anglo's and sort of renegotiate a potential deal. That said, copper prices have actually been quite strong. So anything to do with copper, I'm quite kind of bullish on to a certain degree. But yes, we need this commodity environment to start to gradually tick upwards. We need global growth to come back online, which is more of a global debate as opposed to a South African debate. And, you know, on the back of that, you should start to see some higher resource prices. But yeah, I think generally the diversifieds are probably the best way to play this environment at this stage of the game.
All right. Well, let's talk dividends. Can someone help me understand the Satrix Divi ETF? Is it worth an investment? What's the accretive value and what yield would I get per year? Rowan?
Yeah, so the Satrix Divi is an interesting animal because it tends to pick up stocks that are trading on a historically high dividend yield. Not necessarily a strong forward dividend yield, and that actually often then screens a lot of the resource stocks and counters go in it. So you may be getting sector exposure inadvertently that you're not necessarily looking for. I mean, the banks also have high dividend yields, but I think you need to look quite closely at the underlying portfolio, and if it is something that sort of matches what you want and want exposure to. So the forward dividend yield, I don't know, it could be particularly sort of high, maybe in the upper single digits. But I think it requires a lot more thought than just sort of blindly buying it. You could do better buying high dividend yield individual stocks like the banks and other selected counters if you're looking for dividends. That's would be my preference.
All right. I'm going to quickly sneak in one last question for you, Deryck, before we go to your stock picks. Is TFG still a buy?
Sorry, which one?
TFG.
Which one?
TFG.
Yeah, again, I think, you know, the retail sector's had a decent run. I think, and if you just look at the retail space, it's been somewhat of, when it's good, it's really good, and when it's bad, it's been bad. So Pick n Pay is probably a good example of a very tough environment that it's going through. Probably needs to do a capital raise at some point, which they've told the market. But I think TFG, good business. You know, they've delivered good quality earnings in a very tough economic environment. Good SA-based retail business. I prefer to probably look at some of the food retailers. I know ShopRite is looking full at the moment, but yeah, it's probably fully valued, due for a bit of a pullback, but a good quality business. And I think it's going to be subject to more of the macroeconomic environment looking forward from this price, where, you know, lower interest rates are going to play into the hand of the consumer, and that should be positive for the likes of some of the clothing retailers. So done a lot in the short term, probably consolidates. Decent numbers that have been released. Wait for a bit of a pullback, and again, probably adopt an approach of buy on weakness.
All right. Well, gents, let's quickly get to your stock picks. We have 1 minute between the two of you. Rowan, what will it be?
We're going with capital appreciation. It's a smaller cap stock, so it hasn't really been the beneficiary of the rally yet, so you can still get in. An investment holding company and exposed to the payment sector and software. The numbers look really good. Their results came out recently. It's come a decent dividend. The underlying assets are solid. They've got a lot of cash on the balance sheet, and I think you're getting growth in quite exciting sectors in the tech space at a very reasonable price still here. So that would be our pick.
All right. What are you hanging your hat on today, Deryck?
I'm going to stay with this SA Inc. rally and look to the sort of mid-tier space, and I'm going with Curro, which is obviously in the education space. It hasn't followed the rally that we've seen in some of the sort of more liquid stocks, which talk to the banks and some of the retailers. You know, just looking at the valuation of Curro, I think it still is very cheap. They've kind of communicated to the market that they're going to keep business simple. make sure that revenues are collected, make sure that their schools are full. Not going to run on this grow by acquisition strategy, which it did previously many years ago. And I think if they do that, you could probably see a decent re-rating. It's not going to take a lot to see the share price move from kind of 10 Rand 50 odd where it is at the moment, back up to 13, 14 Rand, just on a simple re-rating. So good quality business, nice underpin of cash flow looking forward. And hopefully if they do start to move in the right direction, they can start to adopt that grow by acquisition strategy again when the time is right. So Curro is my stock pick.
All right. Well, thank you so much for your time and for your analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guests, Deryck Janse van Rensburg from Anchor and Rowan Williams from Nitrogen Fund Managers. Up next, The Close. Stay tuned.